Hello, everyone, and welcome to today's call. My name is Mike Banks. I'm the Chief Operations Officer here at Fund&Grow, and today I have a very special web class lined up for you. We're going to be discussing credit repair and how you can increase your personal credit scores by anywhere from 50 to 100 to 200 points even. And today I have a very special guest on with me. We have Kaydem's Client Services Director, Jillian Reynaldo, and Jillian's going to help us break down the ins and outs of credit repair, all the technicalities, all the strategies that we use at Kaydem. So this is going to be a very, very informative and educational webinar, but you're going to get a ton of actionable steps that you can use to improve your personal credit. So before we go any further, let's make sure that everyone can hear me okay. Jillian, are you there? Can you hear me okay?
Yeah, absolutely, Mike. I'm really excited to be here with everyone. Thank you so much for joining us. And we have a lot of great information, a lot of stuff to cover today to help you guys out.
Awesome. Thank you so much. We're very excited to be giving you guys this web class today because we've never done this one before. This is a new web class. We've done the funding web class in the past. You guys have, I'm sure, been on our webinar where we talk about building business credit lines for your real estate investments or for your whatever type of business you have. But today we're going to hone in specifically on credit repair, the strategies that we use at Kaydem for our Fund&Grow clients, and we're going to go over all the ins and outs, the legalities, the technicalities, and all the things that you should watch out for if you plan on disputing items on your own. So a little bit about Kaydem. We started Kaydem in 2008. It's a full-service bonded credit restoration company. Kaydem was actually created by Fund&Grow due to the dire need that we had to efficiently improve our clients' credit. And a lot of our clients at Fund&Grow, they come to us and they might not have perfect credit. And so in the past, we had to work with other credit repair companies who just weren't getting the job done. So that's how we ended up starting Kaydem, because we needed a solution for our clients that was going to deliver consistent results to get late payments removed, bankruptcies removed, any type of derogatory item, whether it's an inquiry, a collection, whatever it might be. So that's why Kaydem Credit Help exists, because Fund&Grow needed that solution, and we were unable to find it working with other credit repair companies. Some of these other companies wanted to charge $100 a month, and they would kind of just string the client along and not really provide the service that the client needed. So that's why we developed Kaydem. And I'm sure if you saw the emails that we used, that we sent out for this event, then you actually got the background story on how Kaydem was developed and the name that we use for Kaydem. That's actually Ari's kids' names. Ari's daughter's name is Kayla and his son's name is Dimitri. That's how they came up with the name Kaydem, which is it's kind of cute, but at the same time, Kaydem is not at all a cute company. What they do is very aggressive. They're very relentless when they approach the credit bureaus. They're not just calling, or they're not just sending out a letter and crossing their fingers and hoping something happens. They have a very, very aggressive dispute process. It's a 4-channel dispute process. We're going to get more into that here in a minute, but I just want to give you the background on Kaydem and how it was developed and all that, just to give you, the idea of why Kaydem exists and why they're in business today. They've been an industry authority educating the general public and other credit repair companies as well, providing actionable dispute strategies, and we're going to go over all of those strategies right now on the call. So today we're going to cover why good credit is a requirement. And if you're on this call, I'm sure you could agree, having good credit in this day and age is an absolute must. If you don't have credit scores over 680 right now, you're hindering your own growth, whether it's in your business or in your personal life. So we'll talk more about that in a minute, and we'll also get into how the credit bureaus operate, which is a very informative part of this webinar. You're going to really like that. We're going to go over the common myths about credit. We're going to discuss things that people, just misconceptions about credit and about credit repair. We're also going to discuss how negative items are reported, which is something that you need to know so that you can dispute the items that are reporting negatively. You first have to understand how they are being reported by the credit bureaus. We're also going to get into the Fair Credit Reporting Act and all the legal restrictions and legal requirements that go in with credit repair. So that those are things that you're definitely going to want to know if you plan on disputing items or if you plan on having a credit repair company dispute those items for you. We're also going to discuss the most effective and most current credit repair strategies that Kaydem uses to get items removed. And just for your information, they've removed things like bankruptcies 4 years early. So they've removed the most severe items from your credit report, and we're going to discuss the strategies that they use to get those items removed. And we have a couple bonuses for those of you who stay on the web class until the end, just to show appreciation for you being on the call. We're going to give you a free one-on-one consultation with a credit restoration expert. It might be Jillian or it might be someone else at Kaydem, but you'll have that free one-on-one consultation where you'll be able to go over your credit report from top to bottom and really get a good plan of action that you can either take on your own and carry it out on your own, or you can have Kaydem do it for you. And other bonus that we have here is a discount on all services. We're going to offer that at the end of the webinar, but the first portion of the webinar is going to be nothing but education, and then we'll give you that offer at the end for those of you that want to use Kaydem Credit Help at a discounted rate. Okay, so good credit is a requirement. Obviously, for those of you that are on this call, many of you have already come to Fund&Grow looking for funding, and you might have found out that you weren't able to get approved because your scores were a little bit too low. So, here's a perfect example of that. Good credit is a requirement because you need it in order to get loans. You need it in order to get mortgages. You need good credit in order to improve your lifestyle and your business. A higher FICO simply results in more loans, higher limits, more approvals, lower interest rates, and the list goes on. So those are some of the most important reasons to the people on this call right now is getting funding, getting loans, getting approvals so that you can grow your business. But there's other benefits to having good credit. Another benefit is increased employment and entrepreneurship opportunities. A lot of employers out there are checking credit. So if you're going to look for a job, if you're looking for a new career, your credit will be taken into consideration. Financial stability. Let's say that you lose your job, or let's say you lose a client at your business, and you have a slow month. Having access to credit lines and loans gives you more financial stability. And if you don't have any access to credit, or if you have bad credit, you're not going to be able to go out and get a mortgage. You're not going to be able to get the credit lines or the loans or the finance the car or get the furniture that you need. So you're going to really feel that instability just from not having a good credit score. So it's really important for all aspects of our lives, even for insurance rates. That I don't know if any of you know this, but when you apply for insurance, they check your credit. So you really got to make sure that you're on top of your credit. There's just too many benefits that you'll be missing out on if you don't have credit. And a lot of our clients find this out the hard way. So you really want to take action on this. Use the information that you're learning today and put it to use. And also you'll have no or low security deposits on any rentals that you might be looking to go after. You'll be able to buy that house that you're looking to buy, or you might be able to invest now if you get your credit repaired. You might already have a home that you live in, but you might want to invest in some properties that are at a discounted rate, but you can't do that until you have the funding available. And that's something that we're hoping we can help you achieve after this web class. Okay, and here's just a quick example. We talked about going over some case studies of clients that have gone through the Kaydem Credit Help Program and clients that have gone through the Fund&Grow program. And here's the first example of a client named Charles from South Carolina. He initially got started with Fund&Grow, but his credit needed help. So if you look in the middle of the screen right here, you can see what I'm talking about. He initially needed credit repair, but he brought in a partner. Okay, so now you can see that I just crossed out the line I was trying to underline because I'm obviously terrible with the pen. But my point is, this guy needed a partner. He needed to bring somebody in because his credit wasn't up to par. So he brought in a credit partner. He got the initial $20,000 here in his first round, but then he had Kaydem help him repair his credit, and then after he repaired his credit, thanks to Kaydem, he says, he was able to get $50,000 in funding. So there's tons of clients that come to our program. They come to Fund&Grow. They don't have the right credit scores. They can't get funding right away, and they go over to Kaydem. Kaydem does their magic. They get their credit cleaned up, and then Kaydem sends them back over to Fund&Grow because we work very closely with Kaydem and our clients in these scenarios. So once the client's done it with credit repair, they come right back over to Fund&Grow, and we get them the funding that they need. And Charles goes on to say they're very cordial and pleasant to work with, and we do what we say, which is a lost principle in today's society. So thank you, Charles, for those kind words. Okay, so now we're going to start getting into more of the technical side of things, and that's where we're going to have Jillian step in and guide you guys through exactly what a credit bureau is and some of the strategies that we use at Kaydem to give you a really in-depth look, because Jillian's in the trenches every day. Jillian's removing bankruptcies, collections, late payments, inquiries, and in a very aggressive fashion. She's able to get a ton of things disputed and removed for our clients. So we're going to have Jillian go over these more technical slides.
Absolutely. Thanks, Mike. So basically, what is a credit bureau? At the end of the day, a credit bureau is a credit agency that collects and sells information about creditworthiness or the ability to meet different obligations of individuals or companies themselves. They also obviously track business credit as well. Kind of serve as a clearinghouse. So essentially they gather all the information, are supposed to check it for verification and make sure it's accurate, and then they compile it into one report and sell the information to different people attempting to see what your creditworthiness is, such as, lenders or mortgage companies or anything like that. And just kind of a diagram of how it works. So essentially like the financial institutions, government, anybody that reports to the credit bureaus transfers the information over. The credit bureau collects it again. They're supposed to validate it and match it, do some quality control, and then generate the reports. Okay, so the three major credit bureaus in the U.S. are going to be Experian, Equifax, and TransUnion. There are a lot of local and regional, like over 1,000 different credit bureaus, but all pretty much owned by the big three at some point or another. And so are a lot of like the credit monitoring information or credit monitoring companies like Credit Check Total is owned by Experian. You've got ScoreSense owned by TransUnion. So these are the three major companies that handle everything in the United States. Okay, so Equifax, actually, funny enough, began as a grocery store in Tennessee in the 1800s. The store owner compiled a list of consumers' data, as far as like were they creditworthy, were they paying what they said they were going to pay, and demand was instant from other businesses to know whether or not they could trust somebody. So almost 100 years later, by the 1980s, the company was held over 150 million consumer data, and today they are in 19 nations and generate over 150 billion credit score updates each month.
That's amazing. It started out as a list that a grocery store owner compiled of the customers that that have gone to the store that he considered creditworthy, and then he sold that list to other business owners, and immediately there was huge demand, and it just blew up from there. So now, like Jillian just said, they're in 19 different nations, generate 150 billion credit score updates each month, and it started out in a grocery store, which is pretty interesting. And then Experian in the early 60s was started by two aerospace engineers who thought society was going to transition away from using cash, so they started using this consumer credit information unit in a company called TRW. And by the mid-80s, TRW held the credit history of 90 million American consumers, and they officially became Experian in 1996. Experian now holds an extensive database on consumers and businesses in about 50 countries.
And also TransUnion is actually the second of the biggest three to come along. They were founded back in '68 as holding company of Union Tank Car. It was a rail transportation equipment company. And shortly after that, TransUnion jumped into the credit sphere in about '69 when they began acquiring regional and major city credit bureaus. So again, like a lot of those little credit bureaus, TransUnion, as one of the big companies, took over. They've grown over the years, of course, to the point where they now have over 250 offices across the United States and about 24 other countries as well. Just a little bit about the education behind it. We're going to talk about what really makes up a credit score. It's really a question that a lot of people have of how it's calculated. The two major points, one is your payment history. I cannot stress this enough. Your payment history is a giant chunk. And on any new card, a late payment is extremely detrimental. It's just really important to make your payments on time. If you feel like you're going to be late, try and call the company ahead of time. Try to make an arrangement so it doesn't hit. Because I've seen for somebody with 700, 780 scores drop all the way to a 650 over one new late payment. So that's a big portion of that.
Yeah, absolutely. You definitely want to make sure your payment history is on time, and even a little bit early wouldn't hurt. But I think this is such a great slide because I know that there's people out there that think your credit score is the end all be all, but the credit score is made up by all of these different factors and variables. And obviously your payment history is the biggest factor that's when it's weighed into your credit score. So don't just look at your credit score. You got to remember that your credit history is important as well as your score, because your history is what's making up the actual score. And then the next one here is the debt utilization. I think that's the 30%, right?
Yeah, absolutely. So how much you owe on your cards is a big portion of that too. Anyone that's lending you money wants to see how you're handling your debt responsibly. So if you're constantly maxed out, it's going to affect you negatively. The higher you owe.
Well, if you're only paying the minimum monthly payment, but if you max out every month and then you pay that down every month, that's actually a good thing.
Absolutely. Absolutely. So if you're using the card and paying it down below that 30% every month, that's fantastic. But if you're continuing to have the high debt from month to month, that's when you'll start to see a decrease in your score. Knowing and realizing, though, once you pay that off, you will see a rapid increase, but it's important, especially when you're applying for either, business credit, personal credit, loans, whatever it is, that you pay down your cards as much as you can to below that 30%. And then a little bit more of the other things we have is the length of credit. That's just basically based on how long you've had the account, how long it's been open, the amount of history you have. Really is important as far as older accounts that you maintain those. For example, if you have an older card, let's say 15 years old, even if it's a gas card that you don't use often, just keep using it, because the longer your history, the longer a bank knows how they can trust you, basically. So the longer you've been good on a card, the more trusted you are.
All right, here's some common credit myths that we run into all the time, and these are ones that I think Jillian should go over because these pertain specifically to credit repair.
Yeah, absolutely. So one of the biggest credit myths I come across is, will paying off an old collection or charge off increase your credit score? Not necessarily. Of course, I would never recommend anybody not to pay their debt, but if it's an extremely old debt, what's going to happen is that date of last activity is going to renew. So if it's 6 years old and you make a payment on it, that looks like a brand new account. And even though you're paying it off, it's still a negative account. It will, of course, reflect in your overall debt utilization that you've paid it off. Really, you're going to have to use your judgment on type of things like this, because it can cause a decrease in your score at the end of the day, bringing up that old negative account.
So paying off an old collection instead of disputing it and trying to have it removed could actually cause more harm than good, because if it's old enough to where it could have fallen off, then you could have actually gotten it removed without paying it. But once you pay it, like Jillian was just saying, it updates the date of last activity, which then can cause even more negative to your credit report. And in many cases, if the account is over 7 years old, it might have been falling off on its own without even disputing it. So that's something you really want to keep in mind. Definitely consult a credit repair company or even an attorney before you move forward on any collections, because there's many technicalities and legalities that surround collections that in many cases you can get out of paying the collection if you consult an attorney or a credit repair firm.
And another note is that types of credit don't matter. That is really big on a huge myth, because the credit bureaus or overall financial institutions are not going to give as much weight to an installment loan or a secured loan that they will as a revolving line of credit. So even though having, of course, your auto loans and your mortgage loans, that's all great and it shows fantastic history, but what the banks are really looking at is how they can trust you with unsecured credit, how they can trust you with an open line of credit. So, the auto loans and mortgages, they're tied to something. If you don't pay those, they will get a portion of their money back, if not all of it, by taking whatever you secured it to. The revolving is knowing that they can trust you with, $20,000 you're consistently paying it off. So that really has more weight and increases your score faster, does revolving credit. Another note to common credit myths is, as long as you are making your payments on your accounts, your credit score will go up. With that said, that kind of touches back to the debt utilization. Of course, you want to make your payments on time, and that's an important part of it. But if you're only making your minimum payments on the account, your score is not going to go up as much if the card is almost maxed out. So that's where the important part is. Yes, absolutely make your payments on time, but like Mike touched on earlier, if you're really maxed out, you want to make as much payment as you can, because if not, making a $15 minimum payment on a $25,000 balance.
Right, and it just shows the bank that you can't really handle that balance if you're only able to make the minimum payment. They kind of want to see you bring that balance down so that you're not holding all of that liability for too long. They want to see that you can, bring it down, utilize it, bring the balance down substantially. If you're just paying the minimum monthly payment, you're usually hindering your future credit approvals, and when you apply for credit in the future, that's just going to hinder you having all that debt there.
So another credit myth we have is that if you have too many accounts, it will hurt your credit score and that you should close access accounts. That's very far from the truth. Like we said, part of what makes up your credit score is your history. So if you have a lot of accounts, again, even if you're not using them that often, once every few months, if they have a lot of history, you don't want to shut that down, especially if it's all positive. That can really hurt your score.
Yeah, especially if you have debt on some of these accounts, or let's say you don't, but let's say that you've got $20,000 in total credit and you shut down $10,000 of that, you've now increased your debt to credit ratio, which will bring your score down. The more credit you have available compared to the amount of debt you have, the better. But if you only have a small amount of credit available and you've almost maxed those accounts out, your debt to credit ratio is going to go up and your credit score is going to go down. So the more credit available, the better. Don't close any accounts ever, really.
Absolutely. And one of the last credit myths that we get a lot too is if one credit bureau removes an item, the other ones are going to automatically remove it. There is nothing forcing the credit bureaus to mirror each other. They are, at the end of the day, 3 separate private entities and don't have to follow each other. It does, of course, help your chances, because if it's removed from one bureau, what that tells us in the credit repair industry is there was something inaccurate or unverifiable about it. But again, it doesn't require that the other bureaus have to remove it. Now we're going to talk a little bit about the Fair Credit Reporting Act. This is really important in credit repair because it's mainly what we use to get items off report, along with some other acts that we'll discuss as well. But Fair Credit Reporting Act is a federal law. It was enacted in the 1970s. As the credit bureaus came to power, there was a lot of issues as far as how they were collecting the information. Equifax would even call people's neighbors to get all types of information, personal information. How was their married life going? What was their relationship like with their family, and just sell it to whoever would buy it. At that point is when the federal government stepped in and created this law that requires certain things of the credit bureaus of what they can and can't sell. And it's really to protect the consumers from inaccurate reporting. Requires that not only everything is accurate, so yes, it could absolutely be your debt, but is it verifiable? Can they prove to you all the information that is required by the Fair Credit Reporting Act that it has to report? And last but not least is timely. Most things are 7 years to stay on your report, so if it's past the date of last activity for 7 years, it should be removed, except for public records, which is about 10 years. So any bankruptcies, judgments, tackling can report for a full 10 years. Okay, so we're going to talk a little bit just as far as the amount of information that they are required to keep track of and how much is actually inaccurate. And it's really kind of a scary statistic when you look into it that 1 in 5 Americans do have inaccurate data on their credit report. So the credit bureaus track information for approximately about 200 million people. Keeping that in mind, it's roughly 40 million people in the United States have errors on their reports. And not only are there errors, it's errors that's going to prevent you from getting funding, from getting lending, from having those 0% interest rates.
Could you imagine in your business if you had 40 million errors in your business? I mean, we would be out of business. Our clients would be so unhappy with us if we had that many errors on each of the files. But the credit bureaus, they're dealing with information for more than 200 million people, and out of that, 40 million people have errors on their report. That's a pretty high percentage of errors, and it's alarming, to say the least, because you're getting denied for mortgages, or you're getting higher interest rates on your mortgages, or you're getting denied for a business loan, all because of these errors that you could easily adjust.
Yeah, absolutely. It's so bad that even directors from other companies that have done, fact studies into the bureaus, we've got some quotes from them. Consumers should be concerned about mistakes and omissions in credit reports that lead to excessive costs of their credit. This was Walter Dartland, a former Deputy Attorney General of the state of Florida and Executive Director of the Consumer Federation of the Southeast. It is a nonprofit consumer advocacy group. And he goes on to say what is necessary is a plan to reduce these errors.
Absolutely. So he's basically speaking on behalf of all of these customers, these people with errors on their reports, saying that we should be concerned about these mistakes and omissions. And what plan are we going to enact or follow to reduce these errors, or are we just going to continue with the same processes that have led us to these huge amounts of errors that we shouldn't be dealing with? People are handcuffed. They're walking uphill with a broken leg because of this kind of stuff. And the credit bureaus, are they really making an effort to make a change to avoid these types of errors, or are these errors in some way acceptable? That's kind of what I bet this guy here, Walter Dartland's wondering, and he's asking what is necessary is a plan to reduce these errors, and what plan is that? And that's kind of what we're talking about here, and that's why we're doing this webinar, because there's so many people that are being adversely affected by these errors, and we want to help people, relieve their credit of these errors.
Yeah, and it's such a bad issue, Mike, that the FTC actually did a they called it a fact report. It was a study that was mandated by Congress. That's how many complaints they were getting. Not only in 1 in 5 consumers had these inaccurate informations, but 1 in 4 consumers found errors on their reports that affected their scores. 1 out of 5 had the errors corrected. And 4 out of 5 of those people experienced a modification on their credit report. So almost, what is that, about 90% of people saw a correction on their report that resulted in an increase in their score, some of them over 100 points. That's crazy to think. It was to the point that the director of the FTC's Bureau of Economics said these are eye-opening numbers for American consumers. The result of this first of its kind study makes it clear to consumers that they should check their report regularly. If they don't, they are potentially putting their pocketbooks at risk.
So you heard it right there. The plan is check your credit, because there might be errors. That sounds like that's the solution here. For those of you that are listening, if you haven't checked your credit recently, get on there as quickly as possible and get a free credit report. You could do that at, there's a free trial with like Credit Check Total. I think it's $1. You get a 7-day trial at creditchecktotal.com, and they give you all 3 bureaus, so you can review your credit report there. But there's just so many people, so many credit files, so much data to maintain that there's just going to be errors. So what they're saying here is just check your credit as often as you possibly can.
So absolutely, before we get too far involved, there are some legality we need to go over with you. First and foremost, you have the right to dispute the inaccurate information on your credit report by contacting the credit bureaus directly. So anything Kaydem can do for you or any other credit repair company, you can do for yourself, just as long as you stay on top of it, which of course we'll discuss the best ways to do that. You also have the right to cancel your contract with any credit repair organization for any reason within 3 business days from the date you signed it. And last but not least, due to the Credit Repair Organization Act, no credit repair company can legally offer you a guarantee to remove items or a time frame or increase in your score. Even though it's stuff that we're very good at, there is no guarantee at the end of the day.
I just wanted to say, everyone on this call is going to learn how they can dispute the items on their own, but you've got to realize it's not just one dispute and it's done. In many cases, it's multiple aggressive disputes that you have to conduct in order to get these items removed in a timely manner. So keep that in mind when you decide to start doing this on your own.
So as we talked a little bit about the Fair Credit Reporting Act itself, these are common violations. I'm just going to run through them with you really quickly. An account that was balanced was paid in full, but the credit report is still showing a debt is owed. We see this a lot with collection companies and charge-offs. You've made an arrangement with them, whatever the situation is, and they continue to show the debt. A Fair Credit Reporting Act violation, once challenged, is the fastest way to get something removed off your report, because the credit bureaus know and realize that if they don't correct it, they can and will be sued. Another common one is a consumer paid less than the full balance in a negotiated settlement, but the credit report still has the debt owed. So what they are allowed to do here, they do have to report a zero balance. They are allowed to say in the status that it was settled for less than full balance, but they can no longer report a balance at all. Another one is a creditor issues a 1099-C to the consumer, but it's still showing as a debt owed. And a 1099-C basically is whatever you owed them, they wrote off as a debt as income to you. So you have to claim that on your taxes. The account is sold to a debt buyer or a different creditor and only reporting the original creditor. So this is actually a really, really common one. You'll have debt collections that bought, or debt collection companies that bought the account, but the original creditor is still showing. So let's say, for example, you owed Chase, you had a charge off with Chase and you owed them X amount of dollars, but they have now sold it off to a collection company and you have both of those on your report. They both can't report a balance for you.
So that is a ton of technicalities or, issues that, that are common violations. But I personally, I wouldn't know of all of these unless I was working with a credit repair company like Kaydem. So that's why it's so important. If you're going to do these disputes on your own, get with an attorney or get with a credit repair firm to see if there's any of these violations that are occurring, because it makes it so much easier to get the item deleted or corrected when there's one of those violations.
And one of the easiest ways to correct the Fair Credit Reporting Act violations is obviously to dispute directly with the credit bureau that is reporting it. Again, like Mike said earlier, it might take more than one shot. If they're not responding to you at all, you can submit a complaint to the Consumer Financial Protection Bureau, who is a branch of the government that oversees the credit bureaus. And last but not least, you can hire an attorney to sue the credit bureaus if all else fails, which we do happen to work closely with a nationwide law firm, MCCARTHY Law, something we can refer you to if you have any of these issues and either you have attempted to dispute it on your own or we help you out. Either way, there's no upfront cost to you. They do all the work and settle with the credit bureaus directly to remove the item. And you may be even compensated for the violation depending on the situation itself. So here we're going to talk a little bit about some other acts, the Fair Debt Collection Practices Act and the Fair Billing Act. The Fair Debt Collection Practices Act was enacted in 1917, was established for legal protection from abusive debt collection companies and make them accountable for their behavior. So what you had a lot back then was people calling, threatening to sue you, threatening to come to your house, take money from you. Some people got to leave in a little bit more aggressive than that. But the long story short of it is these are both acts that help protect the consumer. There's a lot by the Fair Debt Collection Practices Act that a debt collection company can't do. And the main thing is harass you, multiple phone calls. They have certain time limits, things like that. And then the Fair Credit Billing Act was enacted in 1974. And this just essentially protects consumers from unfair billing practices, providing mechanisms for addressing billing errors. So essentially making sure at the end of the day, like your credit card bills, that you're not being overcharged, the interest isn't accruing incorrectly, your dates, your payment dates are reporting on time and all of that.
All right, now we're going to talk about some of the derogatory items and the adverse information and how it can impact your credit scores. So here's just some general derogatory items. A credit card late payment, 30 days late, could cause you a 90 to 100 point drop. Mortgage charge-off or foreclosure, you're looking at a 140 to 160 drop. And then filing for bankruptcy, you're up there in the 200s, as high as 240 point drop. And many of our clients have come to us with these types of items on their reports, and then we send them to Kaydem, and Kaydem gets these items removed all the time. They've gotten bankruptcies removed 4 years early in the past for many clients. So all of these items, they might severely affect your credit report, but they can be disputed and they can be removed.
So there are many different types of derogatory items. Pretty self-explanatory though. You have collection accounts, any account that's gone past due that's been sold to a collection agency. Late payments, 30, 60, 90, 120 days. Charge of accounts, so any charge account that you've had that you've basically stopped payment on, these are mainly credit cards. And you have your foreclosures, short sales, bankruptcies, different types of tax liens, whether it's federal or state, judgments, repossessions, of course with other things. You've got like child support and other minor things like that as well.
Now here's just a quick example of one of the negative items that we removed. This happens to be a Chapter 13 bankruptcy that Kaydem got removed for one of our clients. And as you can see, it clearly shows you that the bankruptcy is deleted. So this is a screenshot directly from the credit bureau. This is like a document that was sent to one of our clients to prove to you what we're saying is definite and actually works. You can get these items removed, despite popular belief and what you might have heard about credit repair companies in the past. There's definitely some negative reputation out there for credit repair companies. But if you're working with a reputable company, you're going to get results. We've got tons of clients that have gone through the program, And like I said, they start with Fund and Grow, and then we have to send them over to Kaydem Credit Help to get their credit repaired so that they can, actually get access to the business credit lines. So we have to deliver. If Kaydem doesn't deliver, then Fund and Grow can't deliver, and then that means no one's delivering. So we wouldn't be able to stay in business if that was the case. So when we have clients that come to us that need credit repair, we send them to Kaydem, and this is what ends up happening, just like what happened here with Jan and Rob Cartwright out of Orlando, Florida. They sign up with Kaydem. My husband has already had 4 of the 5 items removed off of his report, and I only have 2 of the 5 items remaining. Our scores have gone from 560 and 485 all the way up to 709 and 675. That is huge. That's a couple hundred points each, it looks like. And, they're still disputing and still removing other items. And it looks like they were quoted 6 months, and it only took 3 months to get where they're at now. So there's tons of progress being made. And pretty soon they'll have everything removed from their report, and then they'll be able to go and get $50,000 to $100,000 in business credit to grow their business and take their lives to the next level. Here's just another example. This is LaWanda Davis. LaWanda went from a 659 to a 740 using this exact information that we're talking about on this webinar, working with Kaydem. She was referred by Fund and Grow, and it looks like she initially tried in 2003 to dispute some items, but was unable to, and then tried again in 2009. And at that point, she realized that she needed help. She was hopeful and nervous at the same time, but ended up getting great results working with Kaydem. So this is just proof of what we're talking about here. We're not trying to brag, but at the same time, we're just letting you guys know that this information is definitely useful, and you should really take it seriously, because you can improve your credit using these types of strategies. And you just got to be aggressive. So let's get more into the strategies now.
Yeah, absolutely. And to touch base on the client herself, she attempted to do it several times on her own and didn't have any success. So that's really a big part of it, because it's time consuming. It's not that it's impossible, but it takes a lot of time and it takes a lot of dedication. And that's what we do here. We're going to do all the work for you. So essentially the best way to go about this on your own is obviously to contact the credit bureaus directly. That's your first step once you pull the report and figure out what you need to have removed. Using legal information. Don't just send a dispute letter that says, oh, I don't know what this is, it's not mine, unless that's an accurate statement. But use the Fair Credit Reporting Act. Look for those violations. Look for the different items, for the discrepancies. If you're looking at a derogatory account and you look at all 3 bureaus, I would say about 90% of the time, there's going to be information that doesn't line up, whether it's balances, dates, anything like that, payment information, account numbers. Just make sure you're taking a look at the best way to dispute it and that you're going after the actual violation. Individualize your disputes. There are thousands of template letters out there. Many different companies use them. You can find them on Google. We don't particularly use them here. We actually individualize all of our clients' disputes based on what's going on with their report. Because at the end of the day, if you're sending the same type of letter that everyone else is, the bureaus are not going to respond to that. They will look for whatever reason they can not to respond to you, because it costs them money to investigate these items. And they also get paid by the companies that report them. So anything they can do to push you away, they will. Using multiple dispute channels is a big portion of this. You don't just want to send them letter after letter after letter and crossing your fingers and hoping for the best. We utilize all 4 channels here, and definitely recommend, if you're going to attempt to do this on your own, that you do it as well. Also dispute online via fax, and definitely call them. Call them, not only to submit a dispute, to check on a dispute you've submitted. Show them that you're aggressive and you're serious and you're not going to be pushed away.
Wow, so that's a lot right there. And it might sound pretty straightforward, but you have to follow through on all of those points. You can't just do one of them. You have to make sure that you're aggressively following up. You're making sure that you're using really good aggressive wording in your disputes, and you're contacting them from all 4 channels, not just sending out some generic letter. You have to be aggressive, and you have to do it in a timely manner. You can't do it over the course of 6 months. When you submit that dispute, you have to do it all within that 30 to 45 day cycle. If you don't, you have to do another dispute if you don't get the results you're looking for. But consistency and efficient follow-up provides us better results. So if you plan on doing it on your own, that's exactly what you'll have to do, is just be consistent and aggressive with your follow-up.
Absolutely, Mike. A little bit more on the multi-channel dispute method. I really can't stress this enough. In order to get the results you want, the best results you can, you need to and have to be aggressive with your disputes. You have to stay on top of them. Mark your calendar. Make sure you are going through the different methods. That's where you're going to find your success, not just sending letter after letter. I know it's easy to basically send it and forget it. It's very easy to submit disputes online. Seems like the most logical way to go. I know a lot, like especially if you track it using Credit Karma, they offer to dispute right there in a technology-driven world. You might think that's the best way to go about it. However, it's not usually the case. When you do submit a dispute online, you're very limited in the information you can put in. Typically, the Bureau, depending on which one it is, only allows you 150 to 250 characters to say what you want to say about the dispute. Sometimes that doesn't allow you enough space, so you have to utilize a different channel. Online disputes are great for, disputing a discrepancy in your name or anything like that, or a simple Fair Credit Reporting Act violation, but to go into further detail, really using mail or fax is a great way to go to get your point across. This allows you to create a letter and individualize it to specifically what you're looking for without limiting your explanation. A little bit of a downside on that, especially when you're mailing them in. Credit bureaus are famous for saying they never got it, they don't know what happened. Fax is a little bit better for that because you actually have the confirmation that they received it. However, Experian, just so everyone knows, has shut down their fax line. So with them specifically, you cannot use that channel. But last but not least, one of the most effective ways to handling your dispute is calling them in. This is very effective as you can escalate the dispute not only to the person you're speaking with, but also to a supervisor to ensure that your disputes aren't being handled through an automated system. And that's really what we look at doing here. If you have someone looking at your dispute, it's a lot easier because when you try to challenge a verification through automated system, of course it's going to come back verified. One computer is verifying inaccurate information. So at those times is when you really need that person to take a look at it and go, oh, okay, I see what you're talking about.
Yeah, so calling in is definitely probably one of the most effective ways to get anything done in any business. I'm sure you guys are probably aware of that. Just picking up the phone, you always get the result you're looking for if you just make the phone call instead of sending an email or a text or a letter or whatever. And that's what we practice that also at Fund&Grow for our clients at Fund&Grow. We call the bank and we negotiate with the bank on every application because in some cases they'll deny the application. So we also do a similar process when we call the bank and we negotiate and we kind of dispute their decision. It's the same thing here. If you're not getting an answer through mail or fax or online especially, call up the Bureau, get the geeks in the online department on the phone, and then you're able to get a lot more pull because they're able to review it right then and there. You're actually finally getting a human being to review it, and you get way more results that way. And we found the same thing at Fund&Grow when communicating with the bank, as opposed to just doing it online or sending in the application. It's not until we actually call in and get the human being on the phone to review it that we get the results that we're looking for.
That's a really great point, Mike. And a little bit into the different types of removal you're going to be looking at. So you have your basic derogatory removal, your minor stuff, so late payments, little minor collections, small medical collections, stuff like that is really minor derogatory removal. You go into more major stuff where you're going to need a lot more attention, like bankruptcies, charge-off, tax liens, foreclosure, the more difficult things that are going to take a little bit more time and are going to take more time for you to follow up on. Multiple derogatory items both hurt your credit score and any chances of approval for new credit. Again, it all goes back to the bank wants to know how they can trust you with their money, is what it boils down to. Even if you don't have necessarily your personal credit built up, having a good lendable or being in a good lendable position can assist in just the personal rebuilding so you can get those business loans. Okay, so an important part about the derogatory removal or the derogatories period is it can be a result of minor issues like an auto payment feature failing, or it could be on a spouse's account or a co-signing of a loan, a lender error. I mean, I myself personally have co-signed for family members who didn't make a payment on time and didn't bother saying anything. These issues happen, but it can be handled. It's not the end of the world. For it to fall off naturally, it can take anywhere from 7 to 10 years depending on the account. And a lot of times we get those items removed early. So I guess the point at the end of the day is there's no reason to punish yourself because it can be taken care of early.
Yeah, exactly. I mean, these are all reasons why you could end up with a derogatory, but at the same time, you don't have to wait the 7 to 10 years to get it removed. That's just you're hindering your own progress by doing that. You got to take action and get it removed, dispute it, and it'll come off. Let's talk a little bit about inquiry removal. A lot of our clients at Fund&Grow need inquiry removal after we apply for them. Each time we apply for them, they have to go into inquiry removal phase where they basically dispute the inquiries from the applications. It's pretty straightforward. But in some cases, we have clients that come to us that have tons of inquiries on their credit report because let's say they went to an auto dealership and they ran their credit through a bunch of different banks, and they call it like a waterfall application process where they just send out a bunch of different applications and then you get a bunch of inquiries on your credit report. But those inquiries, each one brings your score down. A soft inquiry doesn't actually show up on your credit report. That's a soft inquiry happens like when you go and pull your own credit at some free credit website. That's a soft inquiry, but it's not actually a hard inquiry. That only occurs when you apply for credit, apply for a loan, a mortgage, anything like that. Then you get hit with the inquiry when they actually pull your credit report. So after, like I said, after auto loan mortgages, you can get those removed as long as they do not result in a personal account. And having those inquiries removed will result in lower interest rates and a higher approval rate on all mortgages and loans. Because think about it, if you've got a bunch of inquiries from a recent 2 weeks ago, the lenders are going to think that you've just went out and applied for a bunch of funding, that you're desperate for credit because you have all these inquiries. Now, if you only had 2 inquiries in the past 6 months, it'd be a different story. But if you've got 10 inquiries in the past couple months, then you definitely want to get those removed before you go and apply for something else, because the lender can see those inquiries and they'll think you're desperate for credit because there's so many, if that's the scenario. If not, if you've only got a couple on there, you don't really have to worry about it. Inquiry removal is an important thing, and we help you with that at Kaydem as well.
Yeah, absolutely. We do offer a completely separate inquiry removal program to kind of suit your needs. So a little bit more on soft versus hard inquiries. Like Mike was saying, a soft inquiry isn't going to hurt your credit score. Uh, Really, this is more the ability to monitor your own credit more frequently with no consequences. Also, if you're looking, like your current credit card companies may do a soft pull if they're looking to increase, or even like those pre-approval letters you get in the mail are also soft inquiries, and they're only visible to you. Nobody else can see them. Versus a hard inquiry is going to impact your score about 2 to 3 points per inquiry, depending. Again, occurs like Mike was talking about when you're applying for a line of credit or any type of loan. And you have to authorize this with the lender. If you didn't authorize it, it's easier to dispute. Visible to anyone who looks at your credit. So if you're out there asking a lot of people for credit, this is where it can hurt you, because again, the banks are wanting to know how they can trust you with their money. And if you're asking a lot of people for a significant amount of money, they might look at you as a little bit more of a risk. Is obviously visible to anyone who pulls your credit, like we were just talking about, and can remain on your credit report up to 2 years if undisputed. Here we've got just a few results from one of our inquiry removal clients. So they had a total of 8 inquiries ranging to 2 to 3 points piece. You're looking at a minimum of 16 points. That can be the difference from a 600 to a 700 credit score.
Exactly. And the great thing is all those items that we just went over, inquiries, late payments, bankruptcies, all of these items can be removed early. I know we said this before. We might sound a little bit repetitive, but it's true. And we really want you guys to understand that you can remove these items early. Even if you've worked with another credit repair company in the past and they couldn't get it removed, it doesn't mean that you're stuck where you're at. We've heard this same story from many of our clients, and they come to us, they start working with us, and we get them results. And if we don't get them results, we give them their, actually we don't charge anything up front, but if we can't get them results, we have a 6-month refund period so that you're totally protected either way. It's not like with other companies out there. You might go and work with like someone like Lexington Law who charges you like $100 a month, and they're kind of, they're kind of, they kind of want to keep you in the program because they're getting $100 a month. So they're not as motivated to get those items removed for you in a timely manner as a firm like Kaydem is, because Kaydem doesn't charge a monthly fee. They charge a one-time fee. No matter how long they have to work with you, they charge a one-time fee, and that's it. And there's actually no upfront fees either. You pay after you get the items deleted.
So we just have a couple more examples of some people we've been able to help. He was working with Kaydem for about a month to remove his bankruptcy that was discharged, less than 2 years old. So this guy's bankruptcy that was discharged, we had removed, and it was less than 2 years old. It might not seem like a big deal, but for anybody out there with bankruptcies, you really realize how it is. A discharge bankruptcy means he went all the way through with the bankruptcy. Where a dismissed bankruptcy, I might not be as shocked. So in other words, you filed for bankruptcy for whatever reason. You didn't go all the way through with it. You had it dismissed. Those are a little easier to get off there because there's nothing in the Fair Credit Reporting Act legally holding that to you. But a bankruptcy that was discharged, that means you went all the way through with it. You wrote off, or the companies wrote off all the different debts. So that's huge. He was able to start rebuilding a lot sooner.
Wow, that's awesome. So the discharge bankruptcies are harder to get removed, and this one was removed. How early would that be? 5 years early?
Absolutely. Well, actually, because a bankruptcy can report for up to 10 years, that's 8 years early.
Okay, wow. This one is Heidi, a realtor from Nevada. Heidi also used Kaydem Credit Help. As Heidi says, after having pristine credit all my productive life and all of a sudden having to live the unfortunate reality of a meltdown on your credit, it's definitely a tough experience. It's in these difficult times that you need support, efficiency, and a friendly helping hand in order to get back on your feet. Kaydem Credit Help is definitely that helping hand and professional support that I was looking for. They were diligent, quick, and informative. My credit was repaired in 8 months, completely repaired in 8 months. Obviously, that's a little bit longer than most people would like to wait, but guess what? Sometimes it takes that long. So if you want to get your items removed, you've got to keep in mind it does take some time. It could take repeated dispute cycles, but it's worth the time, and it's really worth it because you're going to get the credit that you've been looking for, that you used to have at one point. You want your credit scores to be over 700. The only way to get back to that point is to repair your credit and to rebuild your credit, just like Heidi did.
So one of the important parts is figuring out what needs to be done. An easy way you can access your credit report on a consumer level. None of these companies will hit your credit report with an inquiry. So Credit Check Total, powered by Experian, a lot of them offer a 7-day free trial, but they're all very accurate. We recommend all of them for accuracy and security, obviously. And you can pull a full 3-bureau credit report, where a lot of times, especially like with Credit Check Total, or not Credit Check Total, I apologize, with Credit Karma, you only get 1 or 2 bureaus. So it's important to really know what's going on across all 3 bureaus because you can have different accounts reporting different ways to each one. When you're mailing in disputes, here are the different addresses you would use for each bureau. You are going to want to include with your disputes different identification documents, or essentially what's going to happen is they're going to send you a letter requesting them. So it'll just take more time. So you want to make sure you include identification. That's going to be a driver's license or a passport, military ID for those military members we have out there, Social Security number verification, your Social Security card if you have it, if not a recent tax return, W-2, 1099, anything like that. If you are using a tax return, they only need the front page with your information. You do not need to send them the whole thing. And then a recent proof of address. So a recent utility bill, a credit card statement, a bank statement, or a pay stub. There is some outdated information out there for any of you that may have it. Credit bureaus did used to accept a voided check. They no longer do. So that's where you would send your credit dispute, your actual letters. Online, you can use the following links. TransUnion will require you to set up an account. It will not cost anything, but it will require a little bit more verification. So each one you go through the process. For example, with Equifax, you'll go to the home page. It'll say dispute things on my personal credit. It'll ask you some verification questions specifically to what's on your credit report. So for example, it'll say, oh, we see you have an auto loan opened in August 2013. They'll ask you the company, or they may ask you how much the payment is. But basically, once you get past that, you'll be able to see all the information and dispute each negative item. It's absolutely in faxing in your disputes. You can utilize either Equifax or TransUnion. This is a great method, is faxing. One, again, you can confirm that they have received it, and you can send them a long letter if you need to. You will want to include with either Equifax or TransUnion a cover sheet. Attention to the consumer contact department, first and last name, your mailing address, the last 4 of your social. So the reason you want to do all these different methods is because the credit bureaus, it truly is a broken system due to the lack of attention to detail. They have an automated system, it's called eOscar, and that's what they use to verify the disputes. So again, if you have inaccurate information being verified with inaccurate information, of course it's going to come back verified, which is why you have to use these different methods.
Wow, that's amazing. I mean, the guy David Jones says this is a real dilemma because consumers are faced with receiving a different version of their credit reports then that is being reported to the creditors. And even when an error is found, the bureaus seem to be unwilling to address the consumer's concerns, and there appears to be no recourse. So it's just it's a broken system, and there's really no recourse. There's nothing that can really be done other than just keep checking your credit report and dispute the items that are inaccurate, because the eOscar system is automated, and it's just not the most effective system. So that's why you've got to follow up and do the 4-channel dispute process that we do. How do you work around that then? You just basically do the other disputes that we were talking about, right?
Exactly, using the human element. So make sure you're calling, make sure you're going through multiple systems and using different reasons for disputing. Don't use a general template. It's the easiest way to explain it.
And then the multi-channel dispute, getting on the phone, online, fax, and letter, not just the online, because we're talking about eOscar right now, and it's kind of a broken system. So, if you're working with other credit repair companies, ask them that question. Do you guys do any other disputes, or do you just use eOscar? And you'll get a really good idea and picture of how successful they're going to be with repairing your credit.
And that's a really great point, Mike. It's really how we use what we do to cut through the red tape and the overcomplication that putting this system in place has created, is using those multiple channels. I really can't stress how important that is.
And that's why we do it, because like I said earlier, we have to get these items removed for our clients at Fund&Grow. We didn't talk too much about this earlier, but Kaydem was developed specifically to help Fund&Grow clients. Kaydem doesn't really go out and do a lot of marketing and advertising. A lot of Kaydem's customer base comes from Fund&Grow. So that's why Kaydem exists, to get those items removed for Fund&Grow clients. It's, we didn't just develop Kaydem to generate more income. We developed Kaydem specifically to help Fund&Grow clients repair their credit so that they can get access to business credit through the Fund&Grow program. So let's talk a little bit about what bad credit costs you in your life. I mean, obviously, you don't feel too good about things when you know you've got a 500 credit score. You know that you can have a higher credit score than that, so it affects your dignity to start with. And then the next one on the list here, we have you have higher interest rates, so it costs you more money in interest. It costs you more money in coming out of pocket on things that you could have used credit for. You also end up with automatic denials on loans and credit, so you can't even get the funding that you're looking for, so that it makes you come out of pocket for things like marketing for your business. If you want to purchase real estate, you can't really do that if you have bad credit. You can't invest in that marketing campaign, or hire or outsource some help, because you don't have the good credit that you need in order to fund those types of things. A lot of loans out there, pretty much the majority of loans out there, are going to check your personal credit. And for those of you that think you can just forget about your personal credit and leave it in the tank and not clean it up and still get a loan, you're going to be in for a rude awakening, because there are barely any loans out there that are worth having that do not require a personal credit check. You also will lose your financial stability, and you'll lose confidence knowing that you have bad credit, obviously, and you'll lose out on employment opportunities. Here's another example of a client named Aisha Green from Virginia, who went through the program and got 50% of her items removed from all 3 bureaus so far, and she's still in the program with Kaydem. And she says at first she was skeptical, but after a few months of working together, her worries are gone and her scores have increased substantially. And she says, excellent service, and I'm sure you could find her on LinkedIn or on Facebook. All right, let's talk a little bit about what other credit repair companies charge and how that works. And we brushed on this a little bit earlier, but there's companies out there that charge you a monthly fee, so that they're basically motivated to keep you in their client base, so that they can keep collecting that monthly fee. And that's not at all how we work at Kaydem. We're in a hurry at Kaydem to get your items removed, so that we can get you back over to Fund&Grow to get you the funding you need. But with these other companies, they're not that worried about it. They're hoping to keep you on as a client for as long as possible, so that you pay more in fees. Each month you're paying anywhere between $79 to $150 a month, so it could add up easily to $1,800 in total for your credit repair.
And to add a little bit more to that is a lot of these companies charging you by month, they're not looking to dispute everything that's on your report. Here, we look to dispute everything, or mostly. There might be some things we may need to leave out, but for the most part, we look to dispute everything at one time and get you the best results as quickly as we can. These companies charging you by month are going to tell you they're only going to dispute 1 or 2 items at a time because, like Mike said, they want to keep you on as long as they can.
Right. And at Fund and Grow, you know, our main goal is to get our clients funding as quickly as possible because we have a lot of clients who are real estate investors or they're entrepreneurs, they're in e-commerce, they're internet marketers, whatever the case might be. You know, they want to get the funding as quickly as possible. And so that's why we have this multi-channel dispute method. We're very aggressive when we dispute items at Kaydem because we need to get those items removed. We're not looking to string you on for as long as possible. Not at all. We need to get you guys the results as quickly as possible, and you'll see that working with us. We are very motivated to get things done in a timely manner because we want testimonials. We want happy clients. That's the name of the game. That's what we really care about, is helping our clients and showing our clients that we really care about them, and we want to help them. You know, we want to get these items removed, and we hope that, you know, we're able to show you guys that in this web class by giving you all this information. But really, this is the biggest part of it right here, the multi-channel dispute method, being aggressive, following up, and doing it in a timely manner so that you get these results and you get these items removed. Because if you don't do this, you're likely going to get little to no results. So if you plan on doing this on your own, make sure you follow that. And if you don't plan on doing this on your own, if you want to work together with a firm, Kaydem has a one-time fee. There's no ongoing charge. And so there's no monthly charge like with Lexington Law. You won't have to worry about that. It's just a one-time easy fee. And the cost is based off of the number of items that you have that need to be removed. We have custom options. It's not a one-size-fits-all thing. You know, we have specific options depending on how many derogatory items you have. And we also have options available to cover your partner. It could be a spouse, it could be a business partner, it could be a family member or a friend that you bring into the program with you. But if you do that, you end up getting a discount on the total cost. So we have something lined up for those of you on the call that want to get started and you want to contract or retain Kaydem to complete your credit repair. All you need to do is go to kaydemcredithelp.com/fund-and-grow. Again, that's kaydemcredithelp.com/fund-and-grow. There's a discount if you go there that you're only going to see on this web class. So save that link right there. Go pull that link up right now. If you can, open up another browser. You can type in kaydem.com/fund-and-grow. Or you could type out kaydemcredithelp.com/fund-and-grow. So both of those links will work that you see on your screen. I'm also going to send the link through the chat terminal. Like I said, it's kaydemcredithelp.com/fund-and-grow or kaydem.com/fund-and-grow, or you can even call in and they can help you out over the phone. For those of you that don't plan on getting started on your credit repair today, you can still get a free consultation with a credit repair specialist to go over your credit report if you'd like to do that. But that's totally up to you. Now we're going to get into more slides here, and we're going to get into the Q&A. So definitely make sure you stay on the call and send your questions through. We're going to go over some more slides, some more case studies, and some more deleted items like you can see on the screen. But also we're going to get into the Q&A. So send your questions through now, and we'll start answering them as we go through the rest of the presentation. So here's some more results from one of our clients. 21 of the 23 inquiries were removed, and you know, that's about 3 to 5 points per inquiry. So if you add that up, it's about 60 points that we were able to increase this client's credit report just from removing inquiries. And if you go to this link, you'll see that there's options there for inquiry removal as well. Well, actually, no. When you go to this link, all you're going to do is fill out your information. We'll contact you after that and go over the different options. But at this link, all you need to do is put in your name, phone number, email, and that's pretty much it. You're not going to have to put any payment information in. It's just going to be straightforward. And then we're going to get on a consultation with you, and we'll discuss whether you need inquiry removal or whether you need derogatory removal and how much that will cost. It usually ranges from $497 to $797, depending on how many derogatory items you need removed, but there's going to be a 20% discount on that for those of you that get started today. So make sure you go to the link and fill out the application. It's simple and straightforward, just your name, phone number, email, and that's pretty much it. And then we'll get on a call with you, and we'll go over the options that are available to you, and then you can make your decision from there. And here's just another example of a bankruptcy that was deleted through Kaydem's multi-channel dispute method. As you can see here, the bankruptcy is showing deleted here, right here. Here it says the item has been deleted from the credit file, right there. Boom. So this is proof in the pudding right here. We don't only say we can do these things, but we can back it up by showing you these documents that our clients provide us after we get these items removed. So like I said, if you have any questions about any of these things, send them through now. Now's a great time for you to send your questions through, and we're going to open it up. And here's just some more time frames. Derogatory removal usually takes about 30 to 90 days. It can take longer than that, though. Like we showed you earlier, some clients, it takes months to get their credit report fully cleaned up. But these are the typical time frames. Usually it's within 90 days for derogatories, and usually it's within 60 days for inquiry removal. But again, we can't guarantee that these things are going to fall off by day 72. So keep that in mind. And you should also, keep that in mind. Don't beat yourself up. If you try to go and dispute these items on your own and they don't fall off the first time, don't beat yourself up about it. Keep on trying, keep disputing, and you'll get them removed sooner or later. And we found that at Kaydem Credit Help that we have to continue to repeat the process and follow up and dispute and dispute and dispute. And then we end up with images like this where almost everything is deleted from the report. As you can see here, all these green check marks are deleted, but there's just a couple here that are still in dispute, that are just still, finicky, and they're just, for whatever reason, we're having to communicate with the Bureau multiple times, and it doesn't come off right away. It happens, but imagine if you didn't get all these other items removed. So, if you can get 98% of your items removed, you're in way better shape than you were beforehand. So even if you're looking at this and you're thinking, oh, well, they couldn't get all of them removed, look at all the ones that are removed. So your credit scores are going to jump rapidly, increase from this right here. You're going to see a huge increase in your scores after going through and getting these types of things removed. As you can see, this right here is still in dispute, but look at all the other ones that are deleted, 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 deleted. This is very impactful to your credit score to go from having 7 total derogatories going down to only having 5, or I'm sorry, going down to only having 2 remaining, because this is still remaining and this is still remaining. And those are the 3 bureaus, as you can see. Look at that. That's 5 out of 7 removed. That's that's huge. So we talked about this earlier. With having a 700 FICO score, you can get access to zero interest business credit. You can get personal business loans, mortgages, whatever you need, financing for whatever you need. You'll be able to get after you have after you have good credit. That's the main goal of this webinar, is to empower everybody so that they can repair their credit, and then also so that you can get access to funding in the near future, whether it's mortgages, business credit, whatever the case is. But also to help you get approved for lower interest rates on all of those types of loans, and also the ability to invest in real estate and other passive income strategies so that you can grow your wealth, grow your business, increase your income. That's really the main goal that we have here. Just a reminder, we have the free one-on-one consultation with a credit restoration expert for everyone that's on the call. Make sure you stay on the call until the end. Engage with us. Send us some questions. Send us some comments through. And we're going to provide this one-on-one consultation to everyone on the call. And then also you're going to get the 20% off on Kaydem services. So if you want to get signed up, the website is kaydem.com/fund&grow. And we sent that through the chat terminal. And just here's one more testimonial I want to review, and then I'm going to have Jillian get into the Q&A with everybody, because a ton of questions have come in. We're going to get those questions answered, so keep them coming. Send them through. We're going to get your questions answered. All right, so let's get into this testimonial, and then we're going to get into the Q&A. I'm just going to read this one out for you guys. Shelby and Megan have done a wonderful job repairing my credit over the last year. They are also repairing my wife's credit. We didn't think there was a company like Kaydem that could repair our credit with so much professionalism and determination. They really care about their clients and want them to succeed in repairing their credit to get back to good health. They are the best in the industry, and we are looking forward to applying for a business line of credit through Fund&Grow very soon. Thank you so much for all of your help. So this is a perfect case study or example of what I've been talking about this whole webinar. We are in this business right now. Kaydem is in this business specifically to help Fund&Grow clients repair their credit so that they can get access to the business credit that we offer at Fund&Grow. That's why Kaydem exists. Kaydem is not a general public credit repair company. They were developed specifically to help our clients at Fund&Grow. And you should, feel really confident working with Kaydem, knowing that, because Kaydem is only in place to help Fund&Grow clients. So that kind of tells you something, that they're not just in it for the revenue. Kaydem's in it so that Fund&Grow can function. You see, 30% of Fund&Grow clients start with bad credit. So all of those clients go over to Kaydem. Kaydem helps them out, and then they go back to Fund&Grow for their funding. So if that sounds like something that fits your needs, if you need credit repair, if you need inquiry removal, if you have some bankruptcy or late payment or something like that, go to the link and get started, and we'll help you out. The link again is kaydemcredithelp.com/Fund&Grow, or you can call in at the number on your screen. There's no upfront fee. You'll get a free consultation with a credit repair specialist, whether you decide to move forward or not. And you're going to get access to a 20% discount, which is exclusive to everyone on this call. No one else receives that type of discount except the people that are on this web class right now. So we're going to go ahead and open it up for Q&A and start answering some of these questions that have come in, and also go over a few credit repair frequently asked questions. And I'm going to let Jillian take over now and handle the Q&A side of things, and we'll go from there.
Perfect. Sounds great. Thanks, Mike. So one of the questions I commonly have is, can I do this myself? Absolutely. Like I said before, anything we can do, you can do. But is it really worth your time and money? Why risk taking longer, getting poor results, adding another thing to your plate? Let experts handle it. You can fix your own car. It doesn't mean you're going to. And you can focus on what's important to you.
I really like that, what you just said there, because I personally use Kaydem. I use Kaydem, and I don't know why I didn't bring this up earlier, but Kaydem got me a 100-point increase. I had a 660. Now I have a 770 across the board on all three bureaus. And I did not spend any of my time doing that, because my time is most valued at Fund&Grow, running that company, reaching out, getting new affiliates on board, getting new clients through the door. That's where I make my money. So why would I waste my time to do credit repair when I can just contract a company like Kaydem to do it for a few $100s, and then I can focus on my real business where I make my actual money. So in this day and age, time is money. So why waste your time trying to learn how to do credit repair when you could just spend a few $100s and let the experts handle it? I mean, that's just a no-brainer in my opinion. That's why I worked with Kaydem. Even though I know all this stuff and I know how to do credit repair, I still wouldn't do it myself, just like I know how to do credit building, but I don't do it myself. Fund&Grow employees do it. I just run the company. I'm not going to get in there and do it all myself. I'm going to have the team do it for me, honestly, just like you should if you're an entrepreneur or business owner.
Yeah, absolutely. And just a couple notes on that. Like we have here Amy Ross from California, who worked with us prior to entering into the business building program. She says, my credit report contained a numerous of residential foreclosures from investments she made in the height of the real estate bust. Aside from the foreclosures, I also had tax liens and student loans in default. Under legal advice, I filed bankruptcy more than once, which was dismissed, and took my credit, and look at my credit would make you scream and run out of the room. Andrew at Kaydem Credit Help tackled my case head on, and within the first month was successful in deleting over 8 accounts from my report. One bankruptcy removed, and several other credit line items updated favorably. When the dispute credit reports arrived, I hesitated to open the envelopes, fearing for the worst. As I began to read the updates, Tears of joy fell from my eyes. What are you waiting for? No more procrastination. I encourage you to get started today and you won't be disappointed.
And those are all Amy Ross's words. That's our client. You know, she's saying, what are you waiting for? No more procrastination. I encourage you to get started today. You won't be disappointed. So she took the leap of faith. She worked with Kaydem and she got great results, deleting over 8 accounts from her credit report. And by the way, guys, just for those of you that are listening in, wondering why we keep stuttering and stumbling, this is live and we're not polished speakers. We work here at Fund&Grow and Kaydem. We're not polished public speakers, or we're not here to sell you in the best way. We're just simply going over the information that we use for our clients, and we're sharing that information with you guys. And we're stuttering, we're stumbling, but it's live and we're doing our best. So we hope you guys are getting something out of this call. And here's my testimonial. We talked about it a little bit earlier, but that's me. This is my testimonial. I'll go ahead and read this out. I used Kaydem to remove multiple derogatory accounts from my credit report, and within 45 days, all 3 items were removed, and my scores went from 660 to now 780s on all 3 bureaus. And this is 100% truth, 100% factual. I could even show you the reports from a few months back where my scores were in the 660s because this collection was showing up. And we had Kaydem dispute the derogatory items, and now I literally now have multiple credit cards with over 20,000 limits, and I'm able to use those for my business of real estate investing, which I do on the side. And I also have other auto loans and mortgages with really low interest. I have like a mortgage. My mortgage has like 3%, I think, interest. But all of this is from Kaydem, because if it wasn't for Kaydem, I wouldn't have been able to get access to that $20,000 credit card right there that we're talking about, or the mortgage with a 3% interest rate. So these are just some of the benefits that we receive through credit repair. And so I got it. I've done it. Ari Page, the CEO of Fund&Grow, he's used Kaydem. We talked about that earlier on, and in the emails that we sent out to you guys about this webinar, inviting you, we talked about how Ari also had really bad credit, but that's why Kaydem exists, because we were trying to find ways to get our clients' reports cleaned up, and we were just having a hard time finding the solution. So we had to create the solution, and that's how we ended up with Kaydem nearly 10 years ago. So Jillian, why don't you get into some of these questions, and let's do this frequently asked question, and then we'll get into the Q&A. I know there's people that have just been waiting and waiting, so we got to get to their questions.
Yeah, absolutely. So another common question is, how long does this take? On average, we see items being removed within the first dispute cycle. However, it does depend on the credit bureau, the verification process. Sometimes items do fall off right away. Others may take multiple dispute cycles, different methods. So just realizing that your credit situation, whatever it might be, you didn't get there overnight. We're not going to be able to fix it overnight. We are very aggressive. We follow up. We do what we can as quickly as we can, but it can be a process that takes some time.
Yes, especially if you're doing this on your own. I would say expect it to take longer. If you're doing this on your own, expect it to take longer than the 30 to 45 days, because, I mean, that would be perfect if all items fell off in the first 30 to 45 days, but it doesn't always happen, especially if you're going to do this on your own. Then you definitely want to expect it to take a little bit longer than the 30, 45 days. But if you work with a company like Kaydem, on average, we're seeing them falling off in the first 30 to 45 days. Sometimes it takes longer than that. Sometimes we're able to even get it off a little bit sooner than that. But on average, we're looking at about 30 to 45 days.
Just another shot of our actual operating system. A client that was working with us got a lot of items removed. I think a lot of these were late payments or charge-offs, just to give you guys another example.
Yep, and I'm circling on the wrong screen. Oops. Okay, now I'm circling, trying to circle where it says deleted. I hope you guys can see that, but it's pretty clear right there. It says deleted right there, right there. Boom, boom, boom. I love seeing that. When I see this, it just reminds me how real credit repair is, because you hear all these horror stories about the credit repair industry, and you start to believe them. But when you look at these results right here, you become a believer, and you realize, you know what, it is possible to remove credit, derogatory items. It is possible. It's not, it's not like some far out dream. It is actually possible. We have a team here in Florida that does this for our clients day in and day out. They're getting items removed day in and day out. So this kind of stuff definitely can happen for you. You just have to take action and believe it. You have to really believe that it's going to work so that you finally take action on it and start disputing those items.